Welcome back, and well, MicroStrategy updates their guidance on when they're going to be buying back their own stock just 2 weeks after they provided guidance that they weren't going to be buying anything under 2.5 MNAV. Well. This brings us to where we are in the cycle, and everybody knows where we are who watches my videos. We are either at or towards or after the top of the market. And so we have to understand what is going on, because the top of the market doesn't mean it's over. We are seeing big moves in the Ethereum treasury companies, with now Ethereum treasury companies providing Ethereum dividends, which is going to outpace all of these Bitcoin treasury companies that don't have any dividend. And as we've talked about, the Bitcoin companies versus the Ethereum companies, the big difference here is that Ethereum is productive, right? You're making money and yield on staking. They're probably going to give back through these dividends. And Bitcoin, there is no monetization of the actual Bitcoin just yet. I do think in the future they're going to start lending and borrowing and stuff like that. But right now, the Bitcoin companies, they are, in my view, towards the end of the track. And so in today's video, we're going to be exploring what is going on with the Ethereum dividend, what is going on with MicroStrategy, and what is going on with the Bitcoin mining companies. Because as you guys know, if you've been watching my videos, these companies are going to, and probably already have outpaced the performance of many cryptos and altcoins, as people are waiting on the sidelines saying, but Cryptoviser, the top is not in because we haven't had altcoin season, thinking that it's a guarantee in life to have altcoin season, but it's not. And so nothing in these markets is a guarantee, but one of the things is that we can identify good buying opportunities and good selling opportunities, and that's what we do on this channel. So make sure you guys are subscribed to the channel, give this video an absolutely free thumbs up, hit that subscribe plus or join button down below to learn more about becoming a channel member right here on the Cryptoviser podcast. And remember, guys, we upload every single day on this channel to bring you the latest happening in the financial world. And we called the bottom of the bear market in 2022 to the day, unlike many other YouTubers out here. And so Row Rider on X says this. He says Metaplanet racks up another $100 million in Bitcoin and investors barely blink. Bitcoin falls. Now Metaplanet's MNAV has tanked to all-time lows. It will soon go negative, just like MicroStrategy and all the other Bitcoin treasury companies once these Ponzi's stop hammering every top. Bitcoin enters its next winter. And this is what we've been talking about, where we are in the cycle. Guys, we are literally at the 18-month time frame after the Bitcoin halving, which historically in the previous 2 cycles has indicated the end of the bull market. And so all the volatility that we're seeing in individual cryptos and even in these Bitcoin or crypto proxy stocks like MicroStrategy, this is all rotation volatility. This is the same thing that happened in 2021 into 2022 and something that we've been talking about. And yeah, MicroStrategy is folding. Strategy announced at the end of August an update to its MicroStrategy equity at the market guidance to provide greater flexibility in executing our capital market strategy. Now, all the MicroStrategy bulls just a few weeks ago were cheering this on, saying, you see, Cryptoviser, you were wrong. Michael Saylor's not going to sell any shares under 2.5 MNAV. Well, as the MNAV began to compress, which it has, when I started reporting that, it was 1.9 MNAV, meaning you're paying $1.90 for $1 worth of crypto in the stock. And so that's obviously not good. You may as well just buy the Bitcoin itself. But the MicroStrategy bulls say that Michael Saylor's a genius and this is the best trade in the world. Guys, that makes literally no sense. And it also is an indicator that we are at the top of the market because they have nothing else to quantify or qualify their thesis on MicroStrategy, on Bitcoin, on the fact that we're, quote, not at the end cycle. Like we clearly are. We clearly are. And this is why my viewers, you guys, are way ahead of most of the market. I mean, literally YouTubers with millions and millions of viewers, they're not even talking about this. They're not even warning their viewers about what is about to occur. And the fact that when this guidance first came out with MicroStrategy, I didn't believe it. because all it would take was a little bit of resistance from the market and their ability to raise money in other ways, not just for buying Bitcoin. But remember, MicroStrategy has multiple debt facilities that they owe 10% a year, which comes out to about $500 million a year that they have to come up with to pay dividends. And so because they're not a cash flowing company, how do they get that? There's only one way: raise more money or sell more shares on the open market. And so that appears to be what they are preparing for. And so we're going to come back to MicroStrategy in a few minutes, but I want to kind of take a pause because MicroStrategy, in my view, is a downtrending trade. And this is one of the trades that, I mean, if you're not long, you're short, right? I mean, you could be neutral, but in a trade, you're either long or short. You're either believing the price is going to go up or the price is going to go down. And so the MicroStrategy and all the other Bitcoin treasury companies, in my view, are in the midst of a downfall, and maybe not permanently, because keep in mind, I believe that we are going to see volatility. So that means that we can go from over $100,000 Bitcoin down to under 100,000 and then back up to 100,000. So this volatility may also benefit the Michael Saylors or MicroStrategies of the world, but we're going to come back to that in just a minute, because in the Ethereum space, like I said at the beginning of this video, a lot is going on. As you guys know, a lot of companies are starting to hoard and accumulate massive quantities of Ethereum, right? Bitmine has 1.5 million Ethereum when I'm recording this video. Sharplink, it's basically half of that number, 728,000, and these are going to keep increasing. Well, another company called BTCS, which we've covered, is now adding what they call blockchain dividends or bividends. And they're going to be giving dividends in Ethereum to their shareholders. So Charles Allen, the CEO of BTCS, which is a publicly traded company, you can find them on the NASDAQ at BTCS, he said, "I'm thrilled to share that BTCS will pay shareholders a one-time blockchain dividend or bividend of 5 cents per share in Ethereum. In addition, we are offering a one-time 35 cents per share Ethereum loyalty payment to shareholders who move their shares to book entry with our transfer agent and keep them there through January 26 of 2026. Now, I'm not really sure exactly what that entails, and I'm curious why they're giving that date. From my initial analysis, this basically means that you're going to hold your coins or your shares of the stock with a transfer agent and keep them there through January 26, meaning you're not going to trade it. You're not going to sell it. So that will kind of offset some of the selling pressure that we may see if BTCS continues to soar. That's something to keep in mind. Very interesting. But anyway, they said together the dividend and loyalty payment total up to 40 cents per share in Ethereum for eligible shareholders. By rewarding shareholders who hold at our transfer agent, we block predatory short selling, cut manipulation, and build a stronger base. Short sellers are betting will dilute. Our loyalty program fights back." As the largest shareholder of BTCS, he says, "Let me be perfectly clear." He says, "My goal is to grow our market cap primarily through share appreciation, not toxic dilution. I have and will continue to aggressively protect our company and our shareholders from institutions that short our stock to profit at your expense." And by the way, from my understanding, he also sent out a letter asking shareholders to increase the shares by like a pretty large number. I think bringing it up to like 1 billion or 10 billion shares. And so obviously that is going to be dilution. And so if they're not going to be raising money through debt the same way that MicroStrategy did, then they're probably going to be selling shares in the open market, which is dilution, right? And so I don't fully understand whether they're just not going to be diluting or they are, and this is their way to lock up some of the shares to kind of guarantee that these shares are not going to be loaned out to be shorted and stuff like that. But again, they don't do this, right, from when we're going from a bear market to a bull market, because the only way is up. But because we are, in my view, and again, I'm just a YouTuber. I'm just a guy letting you guys know my analysis on the markets, right? You don't have to agree with it. That's fine. You don't even have to like my opinion, but my opinion is my opinion, just like your opinion is your opinion. And so the data that we have collected and gone over for literally months and years on this channel show us that we are at the end stages of the cycle. And so that would kind of go in line with what they're proposing here. let's stop the dilution, let's stop the predatory short selling, and let's continue to buy more shares on the open market at the end of the cycle. And this could indicate that maybe Ethereum will last a little bit longer. Maybe this is where the extended cycle comes into play. We'll just have to kind of wait and see. But anyway, he continues saying this dividend also takes advantage of clear dislocation between our market price and the intrinsic value of our assets. On August 15th, the stock closed at $4.41 a share, despite holding $6.65 a share in cash and digital assets. This gap is a powerful opportunity to reward shareholders while highlighting the underlying financial strength of BTCS. And so you can find out more on Bividend.com. From my understanding, BTCS did a Bitcoin dividend. That's why they call it Bividend. Now they're calling it instead of Bitcoin dividend, a blockchain dividend. But either way, this is good. And this is an indicator of where the market is probably going to go. Because again, these companies have to give back, especially to keep investors interested, right? Because we know that the share price doesn't necessarily indicate the price of the underlying assets. And so I would imagine somewhere down the line, we're probably going to see the same thing with MicroStrategy. They haven't pulled this card out of their pocket just yet, but they have talked about it. They have talked about dividends and potentially doing that in the future. So maybe that's something that MicroStrategy is going to be planning on doing, especially with all of the focus away from Bitcoin and now in the Ethereum ecosystem. And by the way, just the other day, I covered the exit queue for Ethereum staking increasing to over 250,000 ETH, and this continues, right? So we're seeing Ethereum getting exited, and then we're seeing more Ethereum going in the validator queue, keeping the number the same. And people have asked Cryptoviser, well, why does this matter? Well, the reason this matters is because typically when you're exiting staking, it's for one of just a few reasons, right? And typically the reason is because you want to get out of the coin. There's other reasons. Obviously, you want to use the Ethereum for DeFi, but as we've covered, DeFi with Ethereum locked in has significantly decreased over the past few months. And so the Ethereum that was staked, that is exiting the staking, some of it is going back into staking, but not all of it, right? A quarter of it is going back into staking. But then 3/4 of it, where is it going? Now, there's a lot of people who are theorizing that these Ethereum strategy companies like BitMine and SharpLink are buying. And yes, this is possible that they are buying these coins. But is this good or bad for the network? Because, it's not really a sale because it's not happening on the open order books. It's happening on off-chain transactions, I should say. And so this is the way that I look at the Ethereum validator queue. It's an indicator, right? We have about a 2-week window before this Ethereum can exit. And so this gives these Ethereum strategy companies a little bit of a leash, right? Meaning if they want to keep buying, they either have to buy on the open market, which we have not really seen just yet, or they have to wait until this Ethereum gets unstaked. That way they can do these OTC sales with their private investors or institutions or whatever. And that would indicate that we're not going to actually start seeing these transfers for 2 weeks. And this could be rolling 2 weeks, right? And so when I'm looking at this, to me, could be an indicator of when and where the market is going to move and how. Because if we see the 15-day time frame start to shorten and less Ethereum exiting, this could indicate that the exit is kind of slowing down, aka the purchasing is slowing down, aka maybe Ethereum is done. But yeah, it's going to be very interesting to see. There's definitely going to be correlation between this exit queue and the Ethereum market. And personally, I'm looking at this and thinking the most likely outcome is going to be, as long as the exit queue continues to stay at a high rate and a lengthy wait time, we'll continue to see the Ethereum price go up. And so this could go towards the end of the year, could go further, because you have to remember, when the bid is there, meaning if I'm an Ethereum holder and I have large quantities of Ethereum, and the bid is there to buy this Ethereum, guaranteed that I'm going to get the cash, guaranteed that it's not going to drop the price, guaranteed that the order is going to get filled, a lot of these early investors are going to take the bid. They're going to take it. They're going to take the money. And that's how investing works, right? The same thing has been going on with MicroStrategy and the Bitcoin treasury companies, right? They're buying, meaning somebody's selling. And now that the MicroStrategy bulls are realizing, wait, people are selling their Bitcoin. It's like, yeah, how did you think that they were buying Bitcoin? People were selling. Now they're starting to freak out. Now we're going to get back to a MicroStrategy in just a minute, but before we go there, crypto stock for TeraWulf jumps after Google increases their stake by 14%. Just the other day, we heard about Google taking a stake in TeraWulf, about 8% stake. And now they've increased the stake. And now the chief executive officer and founder of TeraWulf, Paul Prager, said it didn't take long for Fluidstack and Google to seize the opportunity to further expansion at Lake Mariner, right? This is their data facility that they're investing in for AI and HPC, as we've discussed extensively on this channel, right? All of my viewers have been well prepared for all of this. We are one of the only YouTube channels that consistently talks about these Bitcoin mining companies, that consistently talks about their movements in the price. And by the way, guys, TeraWulf is the grayscale for my portfolio in this cycle. Now, I haven't done the exact math, but just from the rough estimates that I can remember from my trades over the last couple of years, I have made more money from TeraWulf than most of my other trades. And we've been talking about TeraWulf extensively. I told my viewers in the bear market, look at their board of directors. They had people from the defense industry, the intelligence industry, and that told me that this company views Bitcoin mining as a national security concern. And therefore, they were going to get some pretty big stuff happening. And now they have Google on board. And they're expanding outside of just Bitcoin mining into AI and HPC. And what have I been saying for the last year? Any of these companies that don't transition from just a Bitcoin mining company. By the way, a lot of them haven't. They're just Bitcoin mining. They are going to crater in the bear market, where the ones with AI and HPC potentially are going to do extremely, extremely well because AI is getting expanded and the money is getting is flowing. And so any of these companies that have, the energy bandwidth and the facilities to do Bitcoin mining can also do HPC and AI compute, and they can make money there when the Bitcoin network is not profitable or in a bear market. And this is exactly what TeraWulf is doing. It's not just TeraWulf. Bitfarms is doing the same thing. And so all it takes is one partnership, one investment from the big and mighty Google or NVIDIA or OpenAI or any of these companies. And look what happens to the stock. Straight up. Straight up. And by the way, we've been talking about TeraWulf since under $2, right? I looked at some of my my DCA on my portfolio. It's in the dollar range. And by the way, we've been trading this for multiple years. And this has been a more volatile stock from a price movement perspective than many cryptos, many altcoins that people are sitting and waiting and saying, but Cryptoviser, we haven't had altcoin season. It's like, we have. You may not have taken profits, but that doesn't mean that we haven't had it. And meanwhile, look at this, the price movements on TeraWulf. Last year for $4 up to $8, right? Doubling. A lot of volatility on the way down. And then $2 to $10. It's a 5x. And I don't even know if it's done, right? And maybe it's going to go much, much higher than this. So these are the indicators, guys. These are the indicators. TeraWulf announces Fluidstack expansion with 160 megawatts lease at Lake Mariner. Fluidstack IO exercised their option to expand the company's Lake Mariner data center campus in Western New York. The expansion adds a new purpose-built data center providing an incremental 160 megawatts of critical IT load, with operations expected to commence in the second half of next year. In connection with the new lease, Google will provide incremental backstop of $1.4 billion in support of project-related debt financing and will receive warrants on the stock to acquire 32.5 million shares of TeraWulf, bringing Google's total backstop increase to approximately $3.2 billion. That's how much they're going to basically backstop if they need money, right? Provide the funding. And its total equity ownership in TeraWulf is approximately 14%. And so listen, like, is now a time to buy this stock? I don't know. That's really depending on where you think things are going to go. There's going to be volatility. Like, let's be clear about that. Is this the end? Are we done at $10 or are we going higher? I don't know. I mean, Google taking a big stake in this company and long-term stake, right? An expansion and providing debt financing. This is really big for the growth and the future of TerraWolf. So this is definitely a stock that I think a lot of my viewers are probably doing very well in. And if you are, congratulations, because you are now outpacing most of the market, right? If you bought at $2, now we're at $10, it's a 5x. I mean, there's altcoins out here that haven't even done a 3x this cycle. And so people are looking in the wrong areas to make the most money and in the wrong areas to understand how to make money. And that brings us to MicroStrategy. And by the way, let me know what you guys are drinking today. I'm drinking coffee. It's cold by now. It's iced coffee, but it was hot coffee before this video started. Anyway, into MicroStrategy. We are now at the point where MicroStrategy stock is beginning to plummet. And this is something that I have been warning about for months now, months. And people say, but Cryptoviser, MicroStrategy, Michael Saylor's a genius. I'm like, I'm not saying he's not a genius, but that doesn't mean the stock is going to go up forever, right? We have to really look and understand how the market is operating, why the market's operating, and where it's going to move next. And so when we're looking at MicroStrategy, there is clear movement to the downside, right? And a lot of this is because the company is over leveraged. It really doesn't necessarily even have anything to do with their thesis or their strategy. It has to do with that they're over leveraged. And as I've explained, their whole thesis is just based on the Bitcoin price going up forever and no bear market, which is not going to happen, right? And so now we're at the point where the MicroStrategy bulls are in denial, right? I mean, remember what I told you. This is the market psychological, the psychological chart of market cycles. Personally, a lot of people think that we're down here, including a lot of YouTubers. I think we're up here, but the chart and the sentiment in the market tells me we are potentially already in anxiety and denial for MicroStrategy. Now, this does not mean the price is not going up. I want to be very clear about that. But the Bitcoin therapist posted this and said, there's a coordinated social media campaign to smear the reputation of MicroStrategy Michael Saylor. I'm watching it in real time. Bots, paid actors, crypto influencers are all involved. It intends to negatively manipulate sentiment around strategy. Don't be fooled. Ro Ryder said, we are officially in the anybody who talks badly about the cult leader of the largest and most obvious scheme in history of publicly traded companies is clearly a paid actor stage of the MicroStrategy meltdown. And I would agree. I would agree. Just because the price is going down does not mean there's a coordinated effort to bring the price down. The only coordinated effort that's going to bring the price down is this MNAV, because the MNAV should not be over 1. As I've explained, it doesn't matter what you have. I mean, you could literally, guys, you go to the car dealership, and this is the best car on the lot. This is the newest car. It has all the fixins, all the add-ons, everything. You love it. The minute you drive that off the lot, boom, $20,000 off. It doesn't matter what you think the car is worth. It doesn't matter how much you think that you underpaid for the car. If you go to try to flip that the same day, you're getting $20,000 less probably at a minimum, right? And so the same thing is happening here. It's not that the car dealership has something against you or that there's this big conspiracy against you selling your car. It's just the car's not worth that much. MicroStrategy is not worth what the stock price is showing. It's obvious and it's based on math. It's not based on my sentiment. But these bulls, these MicroStrategy bulls that are so deep in, they can't even see the obvious. This is, I mean, you could literally be blind and see this. I mean, for real. But that's the point we're at in the cycle. And typically, based on my view, when we start to see this, where they're saying, oh my God, there's a coordinated attack, there's just market manipulation, they want to bring down MicroStrategy, it's like, MicroStrategy is trading at a premium. For you to think that that's not going to correct at any point is, I mean, you add the word in there. I mean, it's ridiculous, really. But it's also, Complacency. No, 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 no. We're just getting attacked right now. We're not really coming down in price. We're not in the midst of a rotation into a bear market. We just need to cool off before the next rally. Well, well. BitPain posted this and said, yeah, I'm sure your local Twitter R telling you MicroStrategy is going to MNAV1 knows better than the managers of Norway's $2 trillion sovereign wealth fund, responding to a tweet that shows that the sovereign wealth fund invested in Metaplanet and MicroStrategy. Well, like I said in a previous video, yeah, your local Twitter R does know more than the sovereign wealth fund. And we on this channel definitely do. You know how I know that? Because in the previous cycle, we had pension funds and retirement funds and sovereign wealth funds literally investing in FTX. They weren't investing in Coinbase. They weren't investing in Kraken. They weren't investing in Binance. They were investing in FTX. And so everybody thought that Sam was the genius, and maybe he is. But things collapsed, right? And they didn't have the money that they said they did, at least allegedly. Now, MicroStrategy, they're not showing us proof of reserves. They're tapping out all of these debt facilities, saying, oh, this debt facility is better than the next one, is better than the next one, is better than the next one. Well, what about MicroStrategy? Where does MicroStrategy land in here? And by the way, a lot of MicroStrategy bulls, and this is really when I knew it was effectively over a few months ago, was when I posted a video that MicroStrategy's Michael Saylor sold all his shares from 2023 into 2024. And he did. But people are saying, but Cryptoviser, he has 20 million shares. He doesn't have zero. You're lying. And it's like, no, I'm not lying. What he did was he converted some restricted shares into actual shares, and now he has 20 million again. But in 2023 into 2024, he was selling the stock because his whole thesis is that don't buy MicroStrategy, buy Bitcoin. He tells you this. But the bulls say, no, he's a genius. We're never going to go down. MNAV to 1 is never going to happen. These are just Twitter R's who don't know anything. Okay. Meanwhile, we also heard that Strategy's chief financial officer sold about $10 million worth of shares last week when I'm recording this video at $395 and $386. Insider moves are always a little suspicious. What do you think he knows? I personally don't think he knows anything. I think that they're either buying Bitcoin with the proceeds for their own personal, portfolio, or maybe Jim Chanos said, can someone ask him if he bought MicroStrategy preferred, meaning these debt instruments, these are preferred stocks, with the proceeds? Because if you think about it, the week that I'm recording this video, the week before is when the executives were selling, and then they only were able to buy $51 million in Bitcoin. You guys notice something here? We were going from billions and billions of dollars of raising money and buying Bitcoin to now under $100 million in purchases, like a little bit of a dribble. And to me, this says they're running out of money. They're running out of debt facilities. When they created the first debt facility, it was like, okay, but then they created a second one and you're like, wait, what about the first one? Then they created a third one. You're like, wait, what about the second and the first one? Then they created a fourth debt facility. And I was asking, what about the MicroStrategy stock? But the bulls were like, no, it's bullish. And it's like, what? They're literally selling other products to pump the main product, but the main product can't maintain. Guys, I have been saying this since $400. MicroStrategy cannot defend $400. Every time we go above 400, straight back down, straight back down, straight back down. Is this manipulation? Or this is the market saying MicroStrategy cannot go over $400 because we're already at a premium to the NAV. And by the way, the MNAV has already compressed from 1.9 just a few weeks ago, maybe a month, 3-4 weeks, to 1.6. That's a huge reduction in the MNAV. And so the Bitcoin price can go to $200,000. And technically, the MicroStrategy price can stay completely the same. And that has to do with what they're doing, how they're doing it, and the MNAV. And now we're hearing MicroStrategy has updated their guidance after just 2 weeks. This is the biggest red flag, the biggest siren that I could tell for MicroStrategy to date. And by the way, every flag we get for MicroStrategy is a bigger flag than the previous, right? Again, the first debt facility, maybe even the second debt facility, I'm like, okay, not a big deal. Then the third one, I'm like, whoa, red flag. Then a fourth one, an even bigger red flag. Insiders selling their shares, bigger red flag. Selling their shares the same week that they're buying, or somebody's buying these preferred, bigger red flag. I mean, think about it. The company executives are getting paid in stock. Then they're selling the shares of the stock to go buy the preferred, to buy more Bitcoin to hold the price of MicroStrategy up, if that is what is occurring. Personally, if I was an executive of the company, I would just be selling and buying Bitcoin directly. I wouldn't even, or waiting for a pullback, but they can't do that because they work or they're, executives at the company. So they probably do believe in the whole thesis about what's going on. And so that's where we're at. This is the new guidance. Michael Saylor said Strategy today announced an update to the MicroStrategy ATM guidance to provide greater flexibility in executing our capital market strategy. And so effectively, I'm going to show you guys the before and after because Jim Chanos posted this. So the before was Strategy will not issue MicroStrategy below 2.5 MNAV. Right now, when I'm recording this, we're at 1.6 MNAV. So they're saying they're not going to do anything unless this basically doubled almost from here. That's what they said. Except to pay interest on debt obligations or fund preferred equity dividends, which is wild to think about. Because remember what I said, all of these debt facilities have dividends attached, and all of these dividends are paid quarterly, and all of these dividends are accumulative, meaning if they don't pay it, it just accumulates and accumulates, which is debt on debt, which is crazy, but that's what is going on. Between all these debt facilities, they are on the hook for about $500 million a year, potentially a little bit more than that. That's a lot of money, guys. That's a lot of money. And that's about 50 million a month, 40 million a month. And they're a non-cash flowing business. And so how are they going to do that? Well, based on their guidance, they're going to just sell shares in the open market to pay those dividends. This is why there's a lot of calls that this is, the P word and not going to end well for the investors. But now they changed the guidance just 2 weeks after. And that tells me they can't even get the money they need now. So they have to revert and sell more shares on the open market. So now they're saying Strategy will tactically issue MicroStrategy, meaning sell shares in the open market, to pay debt obligations, that hasn't changed, fund preferred equity dividends, that hasn't changed, and when otherwise deemed advantageous to the company. So basically, there's no guidance. They can sell shares at any price for any reason at any time, and they will. They will. And so where does that leave us, guys? Where does this leave us? I want you guys to see this. This is Josh Mann, who made about $30 million in trading MicroStrategy. And he seems to still be a big bull. He said, only as much as you can afford to ignore. Turn off the screen and look away until the tree shaking is done. There's no NDA, non-disclosure agreement, that protects the information from leaking about inclusion, meaning inclusion in the S&P 500 or other stock index. All this selling is just churning and manipulation to get prices down so that those who sell the rumor and buy the fact do the same stupid thing they always do. So now we have one of the, I considered him a very good trader, right? Because he was able to sell regardless of what the sentiment was and make $30 million in profit. But then he started over trading. And this, remember what I always tell my viewers, guys. I say, by this time next year, there's going to be people in the millions that have nothing because they overtrade. Now, I'm not saying Josh is going to do this, right? Because I think that he's probably not trading all his money, right? But the point here is that they are convinced, the MicroStrategy bulls, that S&P or NASDAQ or any of these stock index inclusions is a lock and guaranteed, and it's going to occur. But I've been hearing this for years now. They said it was going to happen at the beginning of the year. They said it was going to happen in the middle of the year. Now we're heading into the third quarter of the year, and we still don't, there is no confirmation from anybody with MicroStrategy or with any of these stock index companies that they're going to list MicroStrategy. Because remember, MicroStrategy, they're speaking, as Jim Chanos calls it, financial gibberish, right? They're saying, oh, well, we have new accounting practices that we can go by for the SEC. And so their most recent quarter, they made something like, well, this shows the quarter they made $10 billion. But I think on paper it was like 30 billion. So between 10 and $30 billion that they're saying they made, but they didn't make anything. This is just basically them saying, well, we increased our Bitcoin per share, so the Bitcoin is worth this and this. But what happens in a bear market? All of that just dissipates. All of that goes away. So they're not actually making money. And I personally don't believe that the stock indexes will add MicroStrategy when it's a non-profitable company. And I'm talking about real profit. They would not have to be taking out debt and selling shares if they were making money. On paper, they're saying they're making money, but in actuality, they're not. And that's where we are in the cycle. And so everybody is anticipating the stock index inclusion. But here's the deal. We're already downtrending in the MicroStrategy price. Even if Bitcoin goes up, the MicroStrategy can stay completely still or even go down. And they're not understanding this. And that's where we're at in the cycle. When the geniuses, the smart, the experts, and I do believe that these people are smart and experts, and like they're very intelligent. Michael Saylor's a very intelligent person, right? Josh Mandel, very intelligent person. Jim Chanos, very intelligent person. But that doesn't mean that they're going to be right. And that doesn't mean that their thesis is going to play out. And I feel like they're getting lost in the sauce of what is going on, because when you look at the psychological charts, when you look at the Bitcoin halving charts, when you look at the shift from Bitcoin to Ethereum, Bitcoin mining to AI and HPC, it's very clear to me, and probably many of you, that the Bitcoin trade is effectively over. And when it is over, and I'm not saying that the price is not going to go higher, it can. But I'm saying the trade for MicroStrategy, in my view, it's over. And you're seeing that by their slowing down of purchases, slowing down of interest, the compression of the MNAV. Now, there will be a day where it will get bullish, right? Not the day that MNAV goes under 1. Because if we're in a downtrending Bitcoin market, that MNAV can go much lower. And remember what I tell my viewers back in 2020 and 2021, we were trading Grayscale extensively on this channel. And a lot of the reason we were trading it was because of the MNAV premium or discount. And Grayscale was able to move very rapidly. But that trade is over because now we have ETFs and they stay at what the value is. There is no MNAV, a premium or discount in ETFs, typically speaking. And so you can't trade that arbitrage. This is one of the things in the market a lot of people get lost in the sauce. A trade is only a trade for as long as it's a trade. Some trades last for very long periods of time. Some trades, they're pump and dumps, right? Not in the bad sense, but meaning it goes up, people get bored of it, and it goes down. And that's how you get these cycles in the market, where we go up, we go down, we go up, we go down. If you just were going down on a roller coaster for the entire thing, it would be pretty boring, right? You go up, you go down, you go in circles. That's the ride. That is the ride. And so the idea on this ride is, on the way up, you're taking profits. On the way down, you're buying in or looking for better opportunities. And then we go back up, you're buying back in. But these things can take a while, right? We've been in a bull market since 2023. It's 2 years already. People still think that we haven't even started the bull run, which is unbelievable. But there's a lot of other people, and again, at the top of the market, it's, I'm a genius. We're all going to be rich. This is so easy. There's no risk involved here. And that's where we are. We've talked about yield max quite extensively on this channel. Basically, we mostly talked about it in 2023 into 2024. But towards the end of 2024, I was like, time to get out of these, because too many people were getting into them. And the market was starting to kind of sideways trade. You really want to get in these on the way up because they're covered call ETFs. So effectively, they do have very high yield, but the yield and the premium for what you're getting or I should say the MNAV compression, this is different than MicroStrategy because MicroStrategy maintains a high MNAV. But what happens with these yield max ETFs is the price of the actual ETF goes down over the course of time. So this user, Miami Future Trader, said, I provided Grok with $500,000 of investment capital and wanted to allocate 50,000 each to the following ETFs. And these are all basically yield max ETFs. Assume the average weekly close price for July as the purchase price and calculate the weekly, monthly, and annual returns and generate a chart. And this is what it generated. It said on 50,000 investment in each, so $500,000 investment. Over a year, you'll make about $600,000 in dividends. Now, this does seem fairly accurate. It may be a little bit lower than this because you guys have to realize yield max determines the amount percentage-wise based on the share price. So if the share price is going down and you're still getting 10%, right? Let's say the share price was $20 and you're getting 10% a month, right? You're going to get $2. But if the share price goes down to $10, you're now only getting $1 on the same 10%. That's something to keep in mind for yield max products. But it is an interesting thing to see that there are products that you can invest and you can get very high return. But remember, with high return, there's very high risk. With high reward, there's high risk. And some of those risks are not foreseen by the everyday investor, right? This guy's probably a fairly, he says a high yield dividend enthusiast. So he's probably like a little bit more involved in the markets than many people, who probably a lot of his followers as well. He said, regarding the MSTY data, I believe it's reasonably accurate. And then he went into some other things, asking Grok to do this and Grok to do that. But remember, there's NAV erosion, what it's called, which basically means because they're not really making, it's hard to explain, but basically, if we take the MicroStrategy yield max product, okay, a share price of MSTY is right now about $18, okay? So $18. And basically what they're going to do is they're just going to pay the money out of what the funds are in the asset. So over the month, if they're making money, the share price is going to go higher. But the share price is going higher because the net assets are increasing because they're making money. But then once they pay out, whatever they pay out, 7, 8, 9%, the net assets drop. And therefore, the price of the ETF drops as well. And what you typically see, that's called NAV erosion, right? Because you're paying out what they're making and the increases, you're also decreasing the share price because of that. And so if you look here, you can see that the price of yield max went from $45 down to under $20. Now, if we compare this and put the MSTR stock right on top of it, you can clearly see that yield max significantly underperformed MicroStrategy. So in the last 1 year, if you were in yield max, you would be down 25%. But if you were in MSTR, you would be up 170%. This even works on the 6-month chart. On the 6-month chart, if you were in MicroStrategy, you would be up 10%. But if you were in yield max, you'd be down 30%. But then people will say, but Cryptoviser, I'm still making a dividend, which is true. So let's look at the dividend from, this is February, so we'll say from March until now. So let's do the math on this. So these are the dividends, right? Again, very high numbers. We'll do March. So 137.75 plus 13356 plus this, plus this, plus this, plus this. Okay. That means that basically you got $30 over the last 6 months. If I'm doing the math right on that. 118, 123, 147. No, $9. I don't know how I got that other number. But yeah, you're basically going to get $9, right? So you're getting $9 over the last 6 months in yield max, right? In dividends. But meanwhile, the price of the stock has gone down $7.42. So you made $8.96 minus $7.42. So you really only made $1.54. Now, granted, you could say, well, I didn't sell MSTY, so this is all profit, which is true. But then on that $8.96 per share, you're also paying income tax. So that brings that number down a little bit. And effectively, you're almost even, right? Effectively, you're making a little bit more than what the share price is declining. Now, if you hold this for multiple years and you get more in dividends than what you paid for the share, then obviously you're in the green, right? That was a good trade. But here's the deal. Over the course of time, the MNAV erosion eats away very, very hard. You can see this with some of the longer standing yield max ETFs like Tesla's. If you pull up the 5-year chart, it's been in a downward trend since. And so it can keep going lower and lower and lower. And so these trades you can make money. I don't want anyone to think that you can't. You can make a lot of money in these trades, right? If you're staying in them for a longer period of time. But they only work into a bull market, not going into a bear market. And that's where I think a lot of people, right, again, where we are in the cycle, people think that this is just an easy, oh, well, I'm going to double my money in a year. And it's not that easy. And so he does say that you will learn that they're not overly concerned with the NAV erosion or NAV decline for the majority of yield max ETFs. First of all, he said the total return for most of these ETFs are still positive. Kind of true. It is kind of true. Secondly, my followers, he said, adhere to the secret sauce approach of using 50% of the dividends to purchase long-term growth assets like the stock indices or Bitcoin ETFs. So it is an interesting strategy. I just think where we are in the cycle, it's a risky strategy, because as the price of MicroStrategy goes down, or any of these other yield max ETFs that they track, as the price of MicroStrategy goes down, the NAV is going to go down to the MicroStrategy yield max ETF, and that's going to also bring down the dividends. And so everything goes into a downward spiral. But there is one positive note here, and that's the fact that yield max has short option ETFs, including Coinbase, including MicroStrategy. And so basically, from my understanding, they're writing puts on MicroStrategy. And so if we look at the dividends here, they're kind of in line and maybe even better performing than actual MSTY's dividend. And I would imagine as we rotate into a bear market, these will do very well. But keep in mind, very high stock price already, $32. And so a NAV erosion here can bring us down to $10, even in a bear market. And that obviously wouldn't be good, because that's a 60% decline in the price of the ETF, even if you're making a lot of money in the dividends. So I just wanted to kind of cover that to show you that there is ways to make a lot of money in dividends, but there's also risk involved there. And if you're able to see the full picture, you understand what the risk is, and you can assess whether the risk is worth the reward, like this Miami's futures trader is doing here. He believes that this is a positive investment, even with the NAV erosion. And I see his side. I see his point in there. And it may be, not for everybody, but I definitely think for some people who are looking for that constant, steady flow of income. There's risk, but I would say like relatively lower risk than some other assets. But as you guys can see, we are at the end stages of the bull market, in my view. Wall Street is beginning Ethereum dividends. MicroStrategy is beginning its downward spiral. What do you think is the next stage in this cycle? Let me know down below. Don't forget to give this video a free thumbs up, hit that subscribe button, and I'll see you on the next video. Invest responsibly, do your own research, and crypto on.